Most commercial banks are actively lobbying against the introduction of CBDCs because they perceive them to be, a threat.
Thank you for the privilege, dear central banks. With this programmability, what the central bank can do, they can tell you, Brunello, you are only able to shop in the nearest grocery.
No, that's not the way it's intended. Clearly, to start settling your transactions of goods and merchandises, then that would definitely threaten the superiority of the dollar as a global reserve currency. The percentage of democracies in the world is declining while the number of autocracies is increasing.
Why is China going to take advantage?
What happens in Africa, Latin America, Central Asia, Southeast Asia, and the Middle East? It's kind of strange that the West has let China effectively reign supreme. I think they've already won the battle.
Hello and welcome to Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik. My guest today is Brunello Rosa, founder of Rosa and Rubini Associates. Hello, Brunello. Thank you very much for joining me.
Thank you for having me.
So today we're going to discuss the geopolitics of central bank digital currencies. So the idea of central bank digital currencies on the surface is a very simple and good idea. Instead of having your money in a commercial bank, you're having your money with a central bank, so there is no credit risk. So everything is beautiful. But what is the problem that central bank digital currencies are actually solving? Because I'm equally happy to have my money in a commercial bank.
Yeah, one needs to understand the various differences that exist between electronic money and digital money. Electronic money is the one that we use today, which is effectively an electronic representation of physical cash, which somehow has moved into checks and eventually credit cards, and eventually credit cards being put on the internet. And this gives us this idea that we can make our transactions electronically. But digital money is different. Digital money is programmable. You can ask digital money to do things that currently you cannot ask your form of money available to do. The analogy I sometimes make is the difference between having a Nokia and an iPhone. Nokia was a perfectly functioning device.
Very good one.
Yes,
I had a few.
Exactly. Everybody had long-lasting battery, perfect sound quality, reliable and indestructible, and so on. But it wasn't a smartphone. This is the same distinction that we have today between electronic money and digital money. Now, the point is, use cases of what you can do is something that we will discover more and more in coming years. What in reality is happening now is the battle for the platforms, let's put it that way, or the infrastructure. Those who will build this infrastructure will be ahead of the game, will be able to determine the rules.
You mean the infrastructure for digital money, but there are blockchains which are available, which are starting from Bitcoin. But here we're speaking about the platforms built by central banks. And we're seeing this going on in China. We're seeing this going up very actively in Europe, in the Eurozone. And other central banks are joining the ship. So do you think that there is going to be a competition between, let's say, China and the European Union for the digital platform for central banks' money?
Yeah, so you will have to launch a series of platforms on which these digital currencies can run. Let's call them the rails. In an analogy between rails and trains, you need to build the rails on which trains can later on go. And controlling the rails means controlling the trains, the access of trains. So China has already been building these rails extensively along the countries of the Belt and Road Initiative, which are 150 countries out of 125 at global level, 75% of the world population, 50% of global GDP. So it's enormous kind of reach by China. Others will have to use either their rails or build their own rails. and that could be private or public. The Europeans are building, for example, the digital euro infrastructure, and the Americans, of course, will have their own device, so to speak. And this is not going to be public funded. It's not going to be state backed. It's going to be a private sector solution based on effectively stable coins.
Okay, but can you help me understand that? So let's speak about China, because this is the most interesting player, I think, in this game. So they are building an infrastructure on which the digital yuan can circulate. Yes, in principle, anything digital can probably circulate on this platform, but anything else is not so interesting, in my opinion. The yuan is interesting because then China is going to use this digital yuan to trade with other countries, is going to use it to buy oil from Gulf countries, and so on. And it's not just about the rails, it's also about where your train is going.
Absolutely. In reality, also the US stable coins are interesting because it's a way of preserving the dollar's status as global reserve currency, which is threatened by the rise of the digital yuan. And yes, you're correct. It's not just the fact that the infrastructure is built, but it's where the rails go, right? And what you're going to put on them, and what are you going to trade with the currencies running on those rails. Clearly, to start settling your transactions of goods and merchandises, and let alone oil and commodities, clearly that would mark a significant shift in the world economy as we have known it for the last decades. And that would definitely threaten the superiority of the dollar as a global reserve currency. That's the reason why the US is kind of catching up on this game, which I think the start will be late. They understood that they're way too late for the CBDC to happen. Plus, they have some privacy concerns that we can discuss later on, and so they much rather having a private sector solution with the stable coins that are going to be issued by banks. The largest banks in the world are American and non-financial corporations, including tech companies. So you can think it as a competition between US private sector stablecoin and China's public sector CBDC.
Yes, but I thought that one of the beauties, one of the advantages of CBDC is that you hold an obligation of the central bank rather than of the commercial bank. So you don't run any credit risk. And if we deal with stable coins issued by private financial institutions, in theory at least, we still have this credit risk on them.
Yeah, no, that's definitely true. Is one of the advantages, but you can also read as a disadvantage. This is why most commercial banks are actively lobbying against the introduction of CBDCs, because they perceive them to be, how can I say, a threat to their funding. They fear disintermediation as the greatest risk. Of course, from the perspective of the user, it's so much better to put your money in the safest place possible, which is the central bank. But from the perspective of the intermediator of the transaction, so the bank, that might be actually a threat. In any case, let's not forget the CBDC projects we are talking about around the world are hybrid or two tiers, as we could say. The liability is of the central banks, but the management of the wallet and the solutions that were offered are provided by some private sector institution anyway. Your bank would be effectively the one that offers you the wallet on which the digital currency runs. Clearly, it's a difference between having somebody just offering the wallet services compared to having issued the ultimate liability. But this is also potentially solving the stablecoins case, because stablecoins, the way they are currently conceived, must have a one-to-one exchange rate with the dollar, backed by treasury gold and ultra safe assets. So in reality, the credit risk associated to that is not that different.
Okay. Now, if we look at it from the perspective of banks and from the perspective of the stability of the financial system, I would assume that there will be some premium for holding your money with a commercial bank versus holding your money directly with the central bank. So at times of distress, there will be a flight to safety, which means that all people will open their banking apps and immediately transfer the money to CBDCs. And in theory, it should be a one-to-one exchange. And there will be a sudden drain on liquidity with commercial banks.
Yeah, this is the risk of, let's call, bank run from a sofa, which has been highlighted in the literature. The fact that you really get scared, and without even having to run to your local branch, you cannot try to move your money directly from the comfort of your sofa. And that's the reason why I think a CBDC option should always be offered to guarantee everybody that in case something like this happens, you always have the option of a public safe asset. This is something the Americans are not keen on, for example. But the reality is that these are kind of extreme cases in which you might want to hold your money or deposit in the ultra safe wallet of the central bank, so to speak, or vault of the central bank, virtually speaking. In the majority of cases, people will want to be given services attached to this money, digital money. And this is really the premium that is offered in exchange of holding digital currency as opposed to electronic money or let alone cash and coins. That could be of all sorts, could be insurance services, could be points that can be used and spent at the later point, credit of any sort attached to that. So it will be made attractive to hold non-central bank money. Now, of course, central banks will have to strike an equilibrium between being able to offer these services and making sure that they are not disintermediating the banking system. For this reason, most central banks are introducing some form of holding limits that can be varied. In the Eurozone, we're talking about 3,000 euros. In the UK, people have talked about around 20,000 pounds. So it's kind of a different size. And the other thing is that in the current formulation, the CBDC will not be able to offer in the Eurozone any positive return. So you're not kind of rewarded for holding money at the central bank, while most likely commercial banks will offer some form of compensation or reward or interest, positive interest rate, although minimal, for encouraging you to use their own wallet and digital money.
Yeah, and this is a weird construct in my opinion, because if you lend money to the central bank should pay you the price of money, should pay you some interest. But yeah, the way it's being implemented is exactly what you have just explained.
But they offered you the ultra safety, the privilege of holding money.
The privilege, yes. Thank you for the privilege, dear central banks. Okay, now you mentioned privacy issues. With this programmability, what the central bank can do, they can tell you, Brunello, you know what, from now on, you're only able to shop in the nearest grocery.
Yes, no, that's not the way it's intended. Yes, there's the outside risk of being unable to buy cigarettes or excessive alcohol or God knows. But the reality is that no central bank or government has interest in going that deep in the definition of what you can spend money on. It's most likely the vice versa that is true. So it's not how you can spend money, but those who can receive money. For example, in fiscal expansion programs. We give money, as you know, governments give money to people in various forms, and we know how complicated it has been. There's also lots of behavioral economic studies that show that, for example, receiving money in a check at home has a completely different feeling in terms of what you can actually spend than giving some form of tax cuts that gets lost in your monthly payroll. You might have been given exactly the same amount of money, but the effects, psychological effects on receiving the check at home, while conversely seeing a reduction in your tax bill on your payroll, is completely different. And this is the reason why giving money in a certain way and distributing cash, so to speak, in a certain way is so extremely complicated and is inefficient, because in identifying exactly the categories of people that actually need this money is not as easy. When money is programmable, I can make sure 100% that only the people that I'm targeting with the specific measure that I'm deploying will receive this money and nobody else, because clearly they will be identified uniquely. And this is somehow where the privacy concerns emerge, because this identification means that together with digital money, you need to have some form of digital identity. So you need to uniquely identify yourself as the holder and recipients of this fund. And some people are extremely skeptical about this. People say, why should I reveal so many of my data to the government, and so on and so forth? And there are countries, in the UK, for example, there's no identity card scheme. And surreptitiously, this would be introduced by introducing some form of digital money as a form of digital identity or identification. So I understand where this concerns is coming from, but the reality is that all the data that we aim so much to protect um, are already perfectly known. I would say more so to private sector corporations than governments. I was watching, and I conclude with this the other day, a small video that showed how Apple, by default, records everything we do, send it through our iPhone to wherever it goes, I suppose Cupertino, but God knows, for backup and constant feedback, and eventually it returns to us. Now, we are sometimes scared of the government knowing how I spend my money, right? And let's assume this is a legitimate concern. But think about what we give away on a daily basis to these large tech corporations, on which we do or which devices we use, whether it's the iPhone or a Google search or something, images, text, pictures, um, uh, uh, medical examinations, medical data through apps such as Health and others. So, we give so much more than we are feared about revealing to the government via digital currency.
So are you switching back to Naka?
No. I mean, this is, we need to. There was an interesting case. At some point, people said, look, the implicit deal, and none of us knows actually that the implicit deal, when we accept these terms and conditions that, of course, nobody reads, is okay, I use your services, Google Map, Google Translate, and so on, right? For free, in exchange for the other company retaining, reading, storing, elaborating, and so on our data with the privacy, how can I say, guarantees that are associated to that. But they are good, as good as their enforcement is, and so it's questionable, right? Now, somebody said, okay, no, that's not fair. I want to change this implicit contract, free use for my data, and I want to kind of be given an endowment that I can spend on the various platforms because my data are valuable. Let's assume a $200,000, pounds, euros endowment. Then you can spend during your lifetime on the various platforms. Guess what? Probably in the first 2 or 3 years of usage, you would run out of this endowment, and so that route was effectively not followed anymore. And so other routes were followed, such as web taxes or taxes on not profits but revenues based on residency rather than ultimate benefit. All sorts of schemes to try to extract some value from these companies that admittedly made huge profit using data they don't pay for, right? Because there's this implicit contract. You use my service for free, but you need to give me your data, right?
Yeah, but there is a fundamental difference between private sector and the government. The private sector has the purpose of making profits, but you also have the freedom of not buying their services. You don't like iPhone by Samsung. With the government, they have an enforcement mechanism, and they can adopt the laws which will force you to do what they want you to do, and they have all the information about you, so there is no place to hide.
Now, I understand what you're saying, but think about the following. The government can be either democratic or autocratic. If it's democratic, it cannot do what you suggested unless there's some form of democratic guarantees, supervision, judiciary approval, and so on and so forth. If it's autocratic, they can probably do. But now the problem, as you can see, is not whether the technology allowed them to do that or not, is whether the government is democratic or not. So the issue is a priori, not ex post. Think about the following. If the government is autocratic, they can also arrest you. They can also detain you without any reason. They can detain you without a fair trial. You have no right to appeal. It's so much worse than sharing your data or enforcing
Indeed.
any law, right? So the problem is that the government is not democratic, not the fact that there's an additional instrument by which they can force you to do things or they can spy on you. They would do it anyway, right? That's the nature of autocracies. The question is, are we going to more autocratic regimes in general or to
Are we?
less autocratic regimes? Well, I think the tendency, and this is not me speaking, there are studies by VDEM or others that show that the percentage of democracies in the world is declining, while the number of autocracies or similar is increasing, because the definition of democracy, it needs to be understood. Elections don't guarantee a democracy. You vote also in autocratic regimes. It's the freedom of press and independence of the judiciary that define liberal democracy. So the number of liberal democracies is in fact declining, while the number of electoral democracies increasing. Electoral democracies are those in which you vote, but the judiciary is not independent and the press is not free. And so this is happening independently of CBDCs. People, I think,
Yes.
understand that.
Yes, but even when you live in a democracy, and you would argue, let's say, that the US is a democracy, the UK is a democracy based on the criteria which you have just mentioned, but in a democracy where every person has exactly one vote, and in a two-party system, you target a median voter, and the median voter typically receives money from the state coffers, on a net basis, right? He is not a net contributor. He is a net receiver. So he will be, and this is why, by the way, we have seen the governments in many countries moving towards the left. And this median voter will say, okay, I've got very little to hide. It's not about me. It's about those rich guys. And this total surveillance will help the government to collect taxes from those rich bastards who are not paying their share.
But believe me, if the government were to use these extra powers to make the rich bastards, to use your expression, to pay their fair share of taxes, that would be a very good outcome. But I don't think that's the reason why people are concerned. Most people are concerned because they think that the government will spy on them. They would be subject to constant surveillance. They would be prevented from doing things with money that they would like to do, potentially not illegal, but simply considered immoral or not right for any other reason. So these are the privacy concerns that people are making. If anything, I think there's a broad consensus everywhere, even in the US these days, that the rich should pay more taxes. The reality is that I don't think is going to happen. There will always be jurisdictions in which they can go to pay less taxes. But again, this is very little to do with these type of technologies, I would say.
Okay, let's now get back to the railroads, to the digital railroads, which you mentioned before. You especially mentioned China. You mentioned 50% of the world GDP, which the Belt and Road Initiative countries are currently producing. How exactly is this railroad is going to operate? And why is China going to take advantage of other countries because their infrastructure is going to be used?
Yeah, so the Belt and Road Initiative is like the original plan. But there's one that I think is more important, at least as important, if not more important, is a sister project called Digital Silk Road. In the Belt and Road, we've built ports, airports, bridges, and so on. In the Digital Silk Road, you build the digital infrastructure, 5G communication, telecommunications, satellites, broadband, you name it, data centers, right? Okay. Now, as part of that Digital Silk Road initiative, there's also an alternative payment system called CIPS, Cross-Border International Payment System, which is the equivalent of SWIFT built by China. Now, this allows cross-border transactions, and this, for example, was used by Russia to evade the sanctions that the West imposed on them after the invasion of Ukraine. Now, the fact that China built an alternative system, both for cross-border transaction and that system is akin to SWIFT, so it's just messaging, so to speak. But besides the messaging, there's the real rail, where the real infrastructure in which money gets transferred of all sorts. Okay, so that's by far more relevant in the future, although they are still in preliminary stage. They are well advanced. There are already millions of people connected through that system, definitely way more advanced by the Europeans and let alone the Americans, but it's still in introductory phase. This is because they actually started in 2014, so they had kind of a 10-year head start compared to others. The ECB still needs to finish the investigation phase, just to give you an idea, and they are the most advanced central bank in the Western world. So that's what China is effectively doing to make sure that its money can reach the various parts of the world where they want to be. And the key point is the following. Once they go to the countries of the Belt and Road Initiative or Digital Silk Road, they make a sort of comprehensive offer. It's not that they simply offer a new payment system or a new infrastructure. They say, look, we can build everything you need, rails, ports, airports, bridges, um, and the digital infrastructure and the payment system. And at the objection of those countries that, sorry, we don't have the money to pay for this. No worries, we can pay for it. We offered also the financing. But of course, with the financing, you're also going to get some collateral, which means effectively a claim on the assets that they have built and financed. So it's like going to a country and asking and controlling both their assets and liability sides of the balance sheet, which means sort of total control.
But do you need digital currency for that? You can do it anyway.
No, you can do that anyway. In fact, it's already been happening. And lots of countries have fallen into the BRI debt trap or similar. But what will happen, the additional element of that is if you also build the payment system, if you also build the infrastructure on which money runs, you have kind of total control because you have a claim on the assets, you provided the liability, so the financing, and you have also built the infrastructure on in which payments, so all these transactions are happening. It's like having total control, and once it's built, you mentioned before private sector, you can choose, public sector, you cannot choose. This is more or less the same thing. Once it's been built by a country, it's not going to be dismantled because a second country, maybe more democratic or something, comes 2, 3, 5 years later. It's not going to happen that way. Once the infrastructure is built, it's going to be used. It's not going to be replaced that easily. So there's a clear and obvious first mover advantage. And it's kind of strange that the West has not woken up in advance in understanding what was going on and let China effectively reign supreme in this domain for so many years, and will continue to have a domination over the next 2 years because the West is nowhere near where China is in the implementation of their digital currencies.
Well, the European Central Bank is going to implement the CBDC this autumn, right?
Well, they start the implementation phase, but between investigation and implementation, and from implementation to adoption, is still quite a long journey. Assuming legislation is approved on time, because the ECB can do the technical part, and they are doing it. They will finish with the rule book and everything that is needed. For sure, by October, everything will be in place. But guess what? If legislation is not in place, none of it will be used. And legislation is nothing to do with the ECB. You have a system in which European Parliament, European Commission, European Council will have all to agree on the various bits of legislation, regulation, and so on, according to the partition of works between these three bodies. But they all need to be involved. They all need to say yes. They all need to approve. And we have seen in the past how cumbersome this approval process can be, especially if you want to do unanimously. So the question is, can it be done non-unanimously? Can it be done if somebody disagree? Let's assume it's a small country. Okay, maybe we can find a way to overcome that difficulty one way or the other. But if it's a large country, we saw what happened during the referendum for the adoption of the European Constitution. First, it was kind of shut down by the Netherlands, and they thought they could carry on. And then was France. And once France said no, the process died. So what happens if a major country say no to the digital euro? Can it be revitalized? How long will it take? So, the ECB will do all it needs to be technically ready, but the politics of it still needs to be discussed. And politicians are almost completely unaware of the problem. I can tell you, I've spoken with many of them across Europe. Some of them are up to speed. Most of them don't even know what we talk about.
And what the situation in the US?
In the US, the story is very different because the executive order of the 23rd of January 2025, signed by Donald Trump just 2 or 3 days after he got installed for his second term, bans CBDC. So it says CBDC are not going to happen, nor now nor in the future, unless the president changes central bank. And so the question is, how are they going to proceed in this global race for digital money? Well, as I said before, they're going to use the infrastructure they already have, which is the private sector stable coins, both from commercial banks and non-financial corporations. In this respect, maybe politicians are not as aware as they should be, but let me tell you that the private sector is working extremely hard on this. Effectively, they are borrowing the crypto infrastructure and make it ready for something a bit more stable, such as stable coins, and deploying this enormous infrastructure that they already have in place to achieve what they want to achieve. If you ask me whether the general public is aware of this, probably not as much as they should. But I must say that I've seen a few attempts to integrate traditional finance with, let's call it, decentralized finance in the last few days, in fact, or weeks, with the traditional providers of credit cards, MasterCards, Visa, and so on, making alliances with the stablecoins providers, Stripe, Circle, and so on, to make it a seamless transition between where we are now and where we will be in the future. Maybe most people will not even realize what's going on behind the scene. I would suspect that most people would never realize what's really going on because the usability and the smoothness of the process will be such that you don't realize. But believe me, those who are building the system know exactly what they're doing.
Okay. So do you think that the first mover advantage of China will lead to the de-dollarization of the global trade and financial systems?
I think this will be happening anyway. The use of the dollar as a reserve currency has been declining for the last 10 years at least. In 2014 was...
Not very steeply. I think it's reduced to about 58% as share of central bank reserves and has been staying there for around, what, 5, 6, 7 years?
It was 66% in 2014, is now 58, 59 in the last year or so. And so it's not a massive decline, but this is never supposed to be a massive decline. It's supposed to be a gradual erosion. And China is not aiming at substituting, replacing the dollar as the dominant reserve currency or substituting the dollar in all their transactions. That's not their aim. It's almost impossible to achieve, if I may. What they want to make sure is that the dollar remains the dominant currency in the area of the world that is controlled by the US. And China instead is able to provide an alternative in the area of the world on which they project their influence, which is not going to be where the US wants to be, which is effectively North America, Western Europe, Australia, New Zealand, Japan. They consider this to be the US domain, so to speak, and they're not going to challenge the US on those cards. But what happens in Africa, for example? What happens in Latin America? What happened in Central Asia, Southeast Asia, and the Middle East? These are all regions on which China thinks to have an advantage. In some of them, in fact, I think they've already won the battle. Southeast Asia, Central Asia, Africa. I don't think these are places where the US can compete anymore. But there are, regions in which there will be an open battle, say in Latin America, for example, or in the Middle East. We saw just now the trip of Trump in the region, very significant, exactly because the US considered this to be still an open battleground, not to be something that they've lost once and for all. But other regions, I don't think, will follow the same will follow the same route, I think. Most of them, as I mentioned before, will eventually pivot towards China, and they will stay like this for the foreseeable future.
Well, that's quite an interesting forecast. Thank you very much, Brunello. It's been a very interesting conversation. I've learned a lot.
Thank you very much. Until next time. Bye-bye.
Thanks for listening. This has been Capital Horizons.
So if you would like to see or learn more about Capital Horizons, please subscribe below.
From Michael and I, see you next time.